In this video, we're talking about new interest-free credit cards available from Commonwealth Bank and NAB. Are they good or not? Hi everyone, thanks for joining me today. If we haven't met before, my name's Angela. I'm your money messenger. I'm here to teach you what you need to know about money. This channel comes from my background working in financial planning for the last 2 decades. So I'm imparting some of my knowledge to you with regards to money. So in this video, I promised to tell you about the new interest-free credit cards that are available from Commonwealth Bank and National Bank Australia. Are they any good? What are the fees? And what's the catch? So let's get started. With the creation of buy now, pay later services such as AfterPay, ZipPay, Bundle, banks have seen that credit cards have been shunned by Aussies in the last 12 months especially. Over 500,000 credit card accounts have been closed in the last 12 months alone, which is millions of dollars of short-term lending that banks are quite frankly missing out on their interest income now. So Aussies are ditching the credit cards, which are considered old-fashioned, old technology, and just old and boring, in place of buy now, pay later, AfterPay and ZipPay. The main difference is being with AfterPay and ZipPay, there are some fees attached if you miss a payment. However, when repaying money, there's no interest costs, whereas with traditional credit cards, there were very high interest rates attached, 20%, 24% in some cases, which kicked in after an interest-free period and even used to be backdated. The interest used to be backdated to the beginning of your credit card cycle. So not only were you paying interest on a purchase, but interest costs were backdated. Now, a little while ago, that was outlawed by the government. They said you can no longer backdate interest on credit cards, but banks can still charge very high interest rates on credit cards. As I said, 20%, 24%, 16% sometimes, but still very high. If you consider that to a personal loan or a car loan, then the interest rates are double at least. And that was because it was a short-term lending, a convenience lending, so the interest rates were very, very high. Credit cards have been shunned now because services that are buy now, pay later schemes such as AfterPay and ZipPay and whatnot have come around. People are favouring buy now, pay later because there's no interest. Doesn't mean they're fee-free, there's just no interest. So the banks have been trying to come out with a way that they can recoup some of their market share. 2 banks, Commonwealth Bank and National Australia Bank, have introduced products called interest-free credit cards. Now the name sounds interesting, but are they any good? Let's get started on a comparison. I'll give you my honest opinion as to what I think, if they're good or if they're bad, or what's the best option. So with the interest-free credit cards that are available now, Commonwealth Bank, National Australia Bank have introduced 2. With Commonwealth Bank, it's called the Neo card. With NAB, it's called the Straight Up card. Now the difference is there is no interest attached to these credit cards, just a monthly fee. There are 3 limits that you can go for or that you can apply for with these cards: $1,000, $2,000 and $3,000. These cards, because they're offered by banks, they will fall under the responsible lending laws that we have in Australia. So you need to apply for these and then the banks will grant you based on whether or not you can afford to repay them. Whereas with ZipPay, AfterPay, buy now, pay later, there's no responsible lending criteria because they're not loans as such. So they get away with a little bit more in the marketplace. So you apply for your card and you'll be granted depending on what credit limit you go for. So there's no interest rate on purchases. So that could save you 20%, 24% a year or more. There's no late payment fees either, whereas with ZipPay, AfterPay, there are late fees. And like I said, you can apply for 3 different limits with these cards: $1,000, $2,000, $3,000. So on the face value, you might go, that's awesome. Compared to a traditional credit card, sounds pretty good. Yeah, it is pretty good considering there's no interest. However, the limit is quite low for the fee that is attached. There is always a fee. With everything that banks offer or anybody offers, even AfterPay, ZipPay, Bundle, any company is here to make money. So there's always fees. So don't ever think that these companies are here for you to make your life easier. They're here to make profit. So somebody's getting paid always. So it's important to drill down and check what are the fees. In terms of fees, they have a monthly fee that ranges from $10 up to $22 per month, depending on which company you go with. The NAB fees are cheaper than the Commonwealth Bank fees by about $2 or $3 per month. So straight up as a comparison, for NAB, if you have a $1,000 credit limit, you're going to pay a $10 per month fee. But with Commonwealth Bank, you pay a $12 fee. It's only $2 extra, but it is more in terms of percentage. So why would you go with Commonwealth Bank? Straight away, the fees are less with NAB. So the NAB straight up card is cheaper than the Commonwealth Bank Neo card. So let's just worry about the fees of the NAB in the comparisons that I'm going to do for you. If you have a $1,000 credit limit with NAB, you're going to repay $35 per month, which includes a $10 fee. If you have a $2,000 credit limit, you're going to repay $75 per month, which includes a $15 per month fee. And if you have a $3,000 credit limit with NAB, you're going to repay $110 per month, and that includes a $20 fee. Now let's just investigate those repayments further and those fees, because it may not sound like much, $20 a month for $3,000 of borrowings, but it does add up. Also, you need to be aware of minimum repayments. Credit card companies, they just love to offer these minimum repayments to tell you what to do to repay, but the minimum never repays the total balance in full, unless it's over a few years, and that's when the fees can really add up. So with the NAB credit card, the straight up interest-free credit card, say you went for the $3,000 credit limit. You bought something that cost you $3,000 and now you want to repay that quick smart because you want to keep your fees low. So if you repay only the minimum what NAB says, which is $110 per month, and it includes their $20 fee, after a year you would only repay $1,320, not $3,000. So if you only make the minimum repayments, it'll take you much longer than a year to repay that debt. Actually, it'll take you over 4 years to repay a $3,000 debt. So never just make minimum repayments. You've always got to speed up the process because the bank wants you intentionally to hold this debt for a while so they can get fees out of you, quite frankly. It's how they make their money. If you say to yourself, you want to be smarter than the average Joe and you want to repay this debt quick smart, within 12 months, you want to get rid of it. Know that you're going to have to make more repayments, higher repayments. To repay $3,000 over a year, you're going to have to repay $250 per month. $3,000 divided by 12. You've got to add on your $20 fee to pay NAB. So actually you've got to pay $270 per month for 12 months to clear a $3,000 card limit with NAB. Now over that 12 months, you would have paid the $20 fee. $20 each month for 12 months is $240. $240 fees over $3,000 borrowings actually turns out to be 8% in fees that you're paying. So whilst you're not paying any interest, which could be 20, 24, 25% usually with a credit card, an 8% fee is still relatively high with a $3,000 borrowing. You can get car loans, personal loans with lower rates than that, I think, in today's market. So no interest, but the fees still add up. Yes, better than 20%, but still it's there. Now let's compare the fees of the interest-free cards compared to the buy now, pay later services such as AfterPay and ZipPay, Bundle, whatnot. I'm just going to use AfterPay for example because that's one of the biggest companies and probably the most recognizable to most of you. Now with AfterPay, there is a maximum limit of a purchase, a single purchase that you can make of up to $1,500. So you can't just go and buy something for $3,000 using AfterPay. So you'll be able to spend more with the interest-free credit cards. They're coming from a bank, they're different types of products. But with AfterPay, you can only spend up to a maximum of $1,000 in one transaction. So to keep things simple, let's just assume you went for a $1,000 NAB card or you purchased something for $1,000 with AfterPay. Now with AfterPay, you're going to have to repay over 4 installments that are done fortnightly. So to repay $1,000 over 4 installments is going to be $250 per fortnight. So if you don't miss a payment at all, you repay that $1,000 in the 4 installments, you don't pay any fees. That's how AfterPay works. That's the attraction of it. If you do miss payments, however, you're hit with a $10 fee and then another $7 fee, total $17 if that remains unpaid for 7 days, Whereas with the NAB card, if you had that, you could repay that as much or as little as you want, as long as you're above the minimum. But if you want to repay that in the same amount of time as AfterPay, you'd have to repay $250 per fortnight. However, still, repaying $250 per fortnight with your NAB card means you would still have it for 8 weeks or 2 months, which means you would still pay up to $10 per month in fees, over 2 months, $20 in fees. So $20 in fees over a $1,000 debt with NAB equals a 2% fee. So 2% is higher than zero with AfterPay potentially if you're not missing a repayment. So compared to a buy now, pay later scheme, the interest-free credit cards are still more expensive. Also, the amount you borrow with your interest-free credit card will make a big difference because the fees are fixed. They're a monthly fee fixed. So obviously the more you're borrowing, then the fees are lower as a percentage. But the less you borrow, the higher the fees are as a percentage. For example, if you have a $1,000 card with NAB and it takes you a year to repay it, that means you're going to be paying a $10 fee over 12 months, $120. $120 as a percentage of a $1,000 credit card is 12% in fees. So now we're getting up there, you can see. So for small purchases, for small credit limits, the interest-free cards, the fees are up there. They're actually quite expensive. With the interest-free credit cards, both NAB and Commonwealth will not charge you any fees if you have a zero balance for the entire time of a monthly statement. So if you put some purchase on it and you repay it, you're going to be paying your fee, even if at the end of the day your balance is zero because you're using the card. If you don't use it, you don't pay the fee. If you want to have a credit card in your drawer for emergencies, perhaps these could be good. No use, no fee. However, you can negate having to worry about this if you just have some emergency savings. Another selling point, according to NAB and Commonwealth Bank, is that they don't charge any foreign transaction fees, which means the cards may be beneficial if you're buying things online or in different currencies. Say you're buying from Amazon or whatnot in US dollars. However, if you're mucking around with these fees, like I said, if you don't use the card, you don't get hit with a fee. But if you use it just once in the month, you're going to be hit with the monthly fee. So if you're only putting on some small purchases here and there for online shopping, a $10 fee or a $20 fee can actually be really substantial. So instead of the no interest credit cards, there's some bank accounts which don't offer currency conversion fees. For example, HSBC has a really good one. Citibank has a really good one as well. I use both of those when I'm traveling. I have an ATM card that's attached to them. You can use them for online shopping too. If you prefer a credit card facility for emergencies or whatnot, there's one, it used to be called 28 Degrees, now it's called Latitude. That is an awesome card to be traveling with. You can put your own money onto it, so you can still use it as a debit card, ATM card, but the currency conversion fees are awesome as well. And there's no monthly fee attached. So again, I think comparing these interest-free cards to other products around in the marketplace, there's always something else that does the same feature cheaper. Now, although I compared the fees of AfterPay or ZipPay even has a lower monthly fee than the NAB no interest card and the Commonwealth Bank no interest card, I no way, shape or form promote using buy now, pay later. I think for the time it takes for someone to juggle these repayments, and AfterPay, for example, you can have up to 3 purchases on the go at one time that you're repaying. For the time it takes to be juggling this in your day-to-day money life and worrying about it, I think if people put the same amount of effort into planning their finances for the future instead of always repaying something from the past, I think you can get much further on in life without worrying about AfterPay, buy now, pay later, no interest credit cards. All of this can be negated just by having some savings. If you can repay an AfterPay $1,000 purchase by repaying $250 per fortnight, you can save $250 per fortnight. It's the exact same money. It's just you're only putting one away for the future spending instead of repaying someone else for past spending. So with anything in life, I promote savings. Have some savings stashed away for a just in case moment, for a rainy day emergency, for wealth creation. You have to have some savings. Like I said, if you can spend that money repaying a debt, you can choose to instead save that money for you for future. You just need to wait a few weeks to get your savings up and then make the purchase. instead of making the purchase now and then figuring out how to repay it. It's the same money, just put a bit of forethought into your finances. So overall, interest-free credit cards, I don't think they have a place in my finances, that's for sure. I don't think you need to worry about them either. They are better than traditional credit cards. Yes, they are. Are they better or worse than buy now, pay later? Worse in terms of fees, but I don't think the buy now, pay later schemes are worth your time and effort either. If you have some savings attached, you don't need to worry about any of this. And then you have more time to worry about the things that matter in your finances, which is increasing your savings and then investing for the long term to make more money. Because when you make money for you and your family, you then have choices. So keep things simple, keep things easy and clean, and don't worry about juggling and trying to get the best deal of paying as little interest or as little fees as possible. You don't need to worry about any of this once you have savings. That's it from me today. Thanks for listening. You know what? You listen to me, so I want to listen to you. Drop a comment in the box below and tell me what you think about this video or what you found in your experience of using AfterPay or an interest-free credit card. Let me know how you're going with it all. If you've got any questions about money, please also send me a comment and I'll make you a video or I'll answer your questions or do the best I can. Thanks for watching. Please give this video a thumbs up. Please subscribe and I'll see you next week with another video. Bye.